Hello everyone, this is AC from ForexPreparation.com. Today is Friday the 30th of November 2007 and we are currently looking at the British pound US dollar currency pair. What we saw today was pretty much what I suggested would happen yesterday, or we were standing at this high point here at 2.780 and our price declines up to this level of 2.610, which are approximately 170 pips down to this support level set by those this low here at 2.610. And right now we have just broken below this major up trend line, which was a part of this channel in which our currency pair was trading. And as you can see, this is a very important place, since we are in a major uptrend, and then after we have broken below this major uptrend, we see here the price is staying below the lower boundary of this channel, and at the same time the relative strength indicator is also in the below 50 area, which is a bearish signal. And if we draw a line here connecting this peak, our last peak, with the lower part of the lower boundary of the channel, and then we try to construct a parallel line, and we might see that this might be a part of a new channel, and probably our price is trying to reach for the upper boundary of this channel and then dip below it. So a possible thing that might happen is, if we see our price closing below the lower boundary here, or the support level set at 2.610, then if we see a close on the hourly chart on below this support area, then we might consider placing a sell order with tight stops, as I always advise, since you don't want to risk much money for any situation. But the thing that I see here is that there is much momentum and much power in this, a lot of power in this decline, since if we go to 8 hours chart, so if you go to this chart, we might see a couple of things here also. First of all, we have this major peak here at 2.1100, and then we have just established a lower low, and then we have probably touched a lower high. And then a very important thing before an initiation of a downtrend is first to have a decline, as we see here on the chart, between the 9th and the 16th of November, and then we have a little correction area, or this is a probably continuation pattern, which is a rectangle like pattern. At the same time, right here we have this small doji candle, which always is a sign, not always but most of the time, you cannot say always when trading currencies, but most of the times is a sign for a continuation of the previous trend. So at the same time, we have just broken below this trend line, which we saw on the hourly chart. That's another indication that we are heading towards the downsides, and a good place to set our primary target is this support level here at 2.450. So if we go to the daily chart, what might we see here is probably, yes, the relative strength indicator is again it has closed below the 50, below the 50 line, which is again bearish signal. We have a large bearish candle, which is fully covering the previous green candle, another bearish confirmation. So we might expect to see either a not very active day tomorrow, or a day which will, actually today, a day which will turn most of the participants of the market into selling this currency pair. So if we go to another pair, the US dollar Japanese yen, uh, we know by definition that those two currency pairs, the British pound US dollar and the US dollar Japanese yen, are negatively correlated. Or what it means is that if one of those currencies under normal conditions turns up, then the other currency pair is going to curve down. So pretty much what we said about the British pound is valid for this currency pair, but in the opposite direction. So right now we see that we have already established an uptrend, and our price is residing between those two boundaries. We have a rectangle here which formed on the hourly chart, and probably if we see a break above the upper boundary of this channel, or the best thing to happen is to see a break above this resistance area, which is set at 110.40, then we might see further continuation at least to these highs here of 111.50. When we go to 8 hours chart, what we might see here are again a couple of things. Okay, so first of all, we have this divergence here formed between the relative strength indicator and the currency pair on the bottom here. Then another thing is that we have already climbed above our first resistance area, and then we have initiated an uptrend, and the channel which we showed on the hourly chart is this one. It is valid on the 8 hours chart also, but with less candles. And as we see here, our price is residing in the lower boundary area, which means that if it doesn't break below it, it is going to bounce back. So again, if you're trading this currency pair, probably a good thing to do is to set your stop loss orders around the lower end of this channel, or this is going to be around 109.30, and again your target should be around 111.50. Okay, so this is pretty much what we can say about those two currency pairs. And again, back to the British pound US dollar for the last time. So what we can do is just to wait until this currency pair breaks below the 2.600 area, and then place a sell order, and at the same time keep a stop loss target at 2.684. And again, what I see here is a very strong inclination to the downside, and this might turn into a very big movement and a major turn in this currency pair, since we have just broken below the 50 level on the relative strength indicator, and at the same time we have very strong signals coming from the hourly and 8 hours chart. So that's pretty much what we can say for this pair for today, and I'll keep you posted tomorrow again. Thank you. Bye.